Hi, I'm James, and welcome to the end of the week. It's Friday. Thank God it's Friday. It's been the end of hell week for many traders. But one thing I can say is that if you're a new trader, relatively new, and you survived this week, you're probably going to do very well for the rest of your trading career. It's been incredibly difficult, and we've seen volatility beyond that which we've ever seen before. Right, so let me just finish off this week with a very short video. I think everyone's reeling a bit, but there have been some good opportunities. We've taken advantage of some of them, and some of them have been a little bit tricky. Let's start with currencies and the dollar index. And what I'm going to do in this very short video is just touch on each of the main key points that I think are important going into the weekend. So let's get going with that. So the dollar index has now reached what I've now called Moab, coining that term from our WTI trades. And this is the mother of all breaks. We've approached it very sharply, and I expect we should get a bounce. There's a lower Bollinger Band and the support level. If we do break through there, I expect that we'll get a bounce back up to the underside, and then the market will decide what to do. It's a very important, long-term, seriously important support level for the dollar. And if that fails, after having failed an attempt to the top side, which is relevant in this case, we might actually see a continuation of this dollar move down. There's plenty of space to go down. The dollar's been much lower in the past, and there's no reason to think that we can't achieve some of these lower levels right now. It would be good for everyone, the US and the world economy. So, with that in mind, I do think we've got a blow-off top forming here on the euro, potentially the pound. We've been long on the pound, but we only got half of that profit. We took profit halfway up near these moving averages. We've now reached the underside of the trend line, as you can see, quite a long-term trend line, having held above it most of the time, now retesting it from underneath. Can we close above there today and force a move higher, forcing the dollar index down? Or is this enough for now and we'll see the dollar strengthen, therefore the pound and the euro and the other majors weaken? I don't know. We do have one trade on though, and it's not doing the best. It's not bad, but it's not great. And that's short the euro yen, looking for this ultimate pattern to play out. And we've been faffing around at this top level for quite a long time now. But we are gradually angling down with a spike high up to that level and a double top there. Now going across to stocks, please look at yesterday's video, which I'll link at the end of this one and above us right now at the top of the screen somewhere. But these massive moves, 15% up a couple of days ago, a bit of a pullback yesterday. But I want to emphasize one thing. These massive rallies that take place in bear markets are absolutely massive. This one that we saw just the other day was over 15%. That's bottom to top, including the pre-market. So in bear markets, we do get these massive rallies. And look where we've rallied up to, for example, on the NASDAQ, just up to the 20-period moving average and the trend line, and rejected back down into that order block and below. So we're not out of the woods right now in terms of these markets. I don't know if we're going up or going down. And I said the same thing in yesterday's video. I just have one thing in mind, that these bear markets have massive rallies, and I've experienced it many times myself. And most traders get trapped and damaged on the rallies in a bear market when they've already flipped short mentally. So that's the problem that we're facing right now. I do believe that we've entered bear market territory on the NASDAQ, not quite the S&P just yet. And if we have, that means these rallies might just be bear market rallies designed to squeeze out the new short traders. We're also long on MSTR, Tesla, Coinbase, and Google. Those all had good bounces and held up pretty well yesterday, so I'm happy with that. We're also long on Bitcoin. I'm going to refer back to yesterday's video once again. We're long on Bitcoin, Ethereum, XRP, all holding up pretty well. I've got two tranches on Bitcoin. I see as I'm about to open this chart that you're glancing to the bottom left-hand side of the gold chart. We'll get to that shortly. The support level is basically this horizontal support just above the all-time high before the Trump rally, but we do have a smaller level below there, the 61.8% at 72, but we're now trading above 80, 81. So whether we'll get back down there or not is probably more unlikely at this point, and we'll just hold our long position. Same with XRP. Our last position was at 175. And Ethereum, we talked about in yesterday's video as well, which I'll link. The premature overshoot, being too early. We've got all these ledges above us. My ultimate target, well, I wouldn't say ultimate, but near-term or medium-term target for Ethereum is up here at about 2100, but we're going to have to get through some of these other resistance levels above us. But generally, this picture shows a completed M pattern, bit of an overshoot, a bit too early, probably due for a retracement or at least a mean reversion. Got plenty of moving averages above us to get back up to. And I think this level here at 2100, it looks like the bee's knees, so to speak. Now, gold and silver, let me talk about these together. First of all, I'm going to have to expand this chart because I'm hiding it with my face. So we have two tranches short on gold. These are not massive. These are small positions. And I'm looking for a top here. And I'm willing to add on rallies up to about 3280. And in order to offset, remember these are small positions, I'm trying to build a bigger, longer term position for this correction or consolidation in gold. It's obviously disappointing. We got short at the 618 and the 786, and we've broken up above there. So if we keep on moving up to, I suppose, 3280, I might consider adding, and then I'll have about a half size position only at that point. In order to offset the risk of that, I've also got a long position on silver, and that's moving up, although not nearly as much. but we do have a decent profit on this already. We got in at around 30.5 and we're trading at 31.5 now. So that all looks good. Silver's not moving up as rapidly as gold because not only is it an investment metal, but it's also involved in industry. And the moves that we're seeing in the bond market, in the stock markets and crypto, all that sort of thing indicates pressure on manufacturing, which will affect things like natural gas, oil, we've seen those plunge, and including things like silver, which had a massive plunge the other day, as you remember, and we're now clawing our way back, whereas gold didn't experience nearly as big a drop. That plunge is due to the sort of twin nature of silver, industrial and precious metal. So anyway, we're long on silver, short on gold. I'll be looking for 32.80 to add another tranche and then potentially hedge the entire thing. And again, it's not a big full-size position. We're not using leverage here. We're not maxing this out. We're not loading the boat, or whatever terms you like to use. None of that. Just gradually and gently easing into the short position whilst hedging that at the same time with the long silver position. Right, going across to energies. We're out of natural gas now. We have no position, so there's not much more to say. We've reached the top of that trend line. It's interesting how it respected this trend line on this occasion, even though it's been broken up and down on both sides quite recently. That trend line going all the way back to the 10th of March is still holding here on the 4-hour chart. Let's have a look at the day chart on natural gas. And just to reiterate, there's the same trend line. We bounced off the top of it this time. There's also big support below us, 3.45. And we've got the weekend coming up, so I don't really want to hold this into a key support level with the weekend, with all sorts of geopolitical shenanigans going on. And of course, the Trump tariffs, which affect oil and gas as well, because these are both energy plays, and energy is used in manufacturing and industry and transport. And when money's flush, energy gets used a lot more. And, well, I think the tariffs drove this down. We've now reached the bottom of the channel. We went long, and we're looking for a move back up to, there's the other Moab. We have two Moabs now, one on WTI and one on DXY. So I'm looking for a move back up to Moab, whereas on the DXY, I'm looking for a reaction at Moab, and then we'll probably look to go short. And this is the overall path or idea that I've had in mind for the last couple of years, really. We've been short ever since. I think this is the first time I've been long on WTI for about a year, so that's saying something, and that's the path we're looking for. Back up to Moab, a rejection there. We'll take a profit, reverse those longs to short, and look for a move back down to the channel bottom, and then potentially a breakdown to this longer-term trend line, all the way down into maybe the 30s and 40s. So that's oil and natural gas. We're out of natural gas, so not much else to say about that. Watch out for the video on Sunday night or Monday morning. We'll relook at natural gas and decide how we want to play this going into the next week. And the next contract's coming up soon too. We're still long on URA, the uranium ETF, and let's have a look at the uranium futures again quickly. Almost no movement this week, moving sideways for 4 weeks now. Above that support level, 200 period moving average, and the 50% retracement level. So as long as that holds, we should be okay, and we might even add to a long position on URA. And that's all on that side, and let's go across to VIX and TLT. 10-year yield still moving higher, unbelievably, and that's a very bad sign overall for these markets, as the markets are thrashing around with 10, 15% moves per day, but the 10-year yield moving up, which is a little bit odd and a little bit strange, particularly seeing these big bounces in the stock market, but no commensurate move in the 10-year yield. As you can see, TLT's moved down. We took our profit at the 200 period moving average, and we're now out of that one altogether. We have nothing on VIX. VIX has still not decided which way this market's going to go. I refer to what I said earlier about these bear markets and massive rallies. And then the Rand reached an all-time low against the pound and almost the dollar just yesterday. So pretty bad news for the Rand. And not surprisingly, considering the political shenanigans and toing and froing and their fight that's going on with the USA right now. And then softs and grains, no real change. Bit of a rally really on corn, cotton, orange juice, wheat and soybeans. We're long on all of those. Sugar dropped off a bit. We're also long on sugar. We have no positions on cocoa, looking for a rally to sell into. And coffee, we took 50% profit off here at the top of this trend line. And I'm looking for a bit of a bounce to add those positions back on, that 50% I took off, with a view to retesting this low that we just bounced off and then back into the channel and eventually below this channel into more sensible levels, maybe in the 180 to 220 sort of level. Well, folks, I hope you enjoy that. Have a great weekend if I don't see you before that, and consider subscribing to the channel. It would really be appreciated. And click the join button if you'd like to join the channel. There's all sorts of perks coming along, which I'll be letting you know about in the next videos coming up. Take care.
Oi, what's the news? There's a breakout brewing, mate. Don't hit snooze. I'm in with a pony, keeping stops real snug. On the ladder all morning, sipping builder's mug. Tick-tock, governor, the market don't wait. Scalp that bread and dodge the dead weight. Bull or bear, don't matter to me. I'm a London